Fine. Good day, everyone. This question is from 2022 classroom practice question for the trial balance. If you can remember in the previous sessions, Sudha, we have discussed double entry system, and there we have talks about how we're going to prepare the ledger accounts and how you balance the ledger accounts and how you prepare the trial balance. And this is a practice questions that I'm giving you with regard to the trial balance. So then you can go through this video and have some understanding about the trial balance, but keep in mind, as a separate sessions, we are going to do the trial balance in detail, right? So this is just a practice question that you wanted to do to get some knowledge, to refresh your knowledge on the trial balance, right? So you know that trial balance is a list of ledger accounts that you prepare as at any given date, right? It's just a list of ledger accounts. So by the time you're preparing the list of ledger accounts, all the assets and the expenses usually you recorded in the debit side of the trial balance, and equity, liability, and the income you record in the credit side of the trial balance, right? But all depend on whether you have a debit balance or a credit balance, right? By the time you prepare the trial balance. Okay, the first question, the first item here, you got the land. Land is rupees 5 million. Puta, if the land balance is rupees 5 million, that has to be taken into the trial balance. Land rupees 5 million. You can see I do the question in rupees 1000. Therefore, 5 million I record in the debit side as 5000. Land is an asset which has a debit balance. Then the building is rupees 3 million. That also is having a debit balance because it is also an asset. Machinery rupees 3 million. Machinery rupees 2 million. That also is having a debit balance. Machinery. And next, trade receivable rupees 600,000. Trade receivable rupees 600,000. Put the trade receivables, debtors. All the receivables are assets, so then you record the trade receivable also in the debit side of the trial balance. Trade payable rupees 500,000. Trade payable. Trade payables are liability. Trade payables are liability rupees 500. You record it in the credit side. Trade payables are liability. Then stock balance is rupees 400. Stock is an assets. Stocks 400. You record it in the debit side. Cash balance is 200. Cash 200. That is also having a debit balance. Accrued expenses rupees 50. Accrued expenses rupees 50. So the accrued expenses is having a credit balance, so then you need to brought forward it from the credit side. Accrued expenses. Accrued expenses are the expenses which you have not paid on time. So it's a liability. Till you settle it, it's a liability. Liabilities are recorded in the credit side of the trial balance because it has a credit balance. Prepaid expenses 20,000. Prepaid expenses 20,000. Prepaid expenses are the expenses that you paid in advance, so that it is an asset. Electricity expenses rupees 12,000. Electricity rupees 12,000. That also an assets. The rent income rupees 40,000. Rent income rupees 40. That you want to record in the credit side. Rent income. Bank loan is a liability 1,200,000. Bank loan. $1,200,000. What next? Sales rupees 2 million. Sales rupees 2 million. That also is having a credit balance. Cost of sales is an expense, Sudha. Cost of sales. It's 1,200,000. It has a debit balance. You can see what you write in the credit side of the trial balance, Uta, in the, you can see, right, in the debit side of the trial balance, in the debit side of the trial balance, usually you are writing assets and the expenses, because assets and the expenses are usually having the debit balances. But in the credit side, but on the credit side, you write what? Liabilities, income, as well as equity. Equity, right? Therefore, only the assets and the expenses are having the debit balances. Only the assets and the expenses are having the debit balances. Usually, right, it has a debit balances, so then you record it in the debit side. And equity, liability, and the income are usually having what balance? A credit balance. Equity, liability, and the income are usually having the credit balance. So then the credit balances you listed from the credit side, debit balances you have to listed in the debit side, right? What next? Cost of sales. And after the cost of sales, you get the sales return. Sales return. So the sales return is what account? Sales return is what account? Keep in mind, Puta, sales is an income account. Sales is an income account. Sales return is also an income account. Keep in mind, sales is an income. Sales return is also an what account, Puta? Income account. So then both the sales and the sales return you recognize as an income account. Even though you identify that as an income account, it has a debit balance. Therefore, sales you record in the credit side, and the sales return must be deducted from the sales return. Therefore, it has to be recorded in the debit side. Therefore, sales return you record in the debit side rupees 500,000. But even though you record it in the debit side, keep in mind, Puta, it is an what account? Income account. Purchases return 500,000. Purchases return rupees 400,000. Puta, purchases return is what account? Keep in mind, Puta, purchases account is an expense account. Purchases return account is also what account? Expense account. But it reduces the expenses. Purchases return reduces the expenses. So then you can't consider that as an income. Still, it is an expense account. But as it reduces from the expenses, it has a credit balance. Purchases return. Right. What next? Salary rupees 100,000. Salary rupees 100,000. Salary rupees 100,000. What next? Salary is an expense. It has a debit balance. Put a telephone bill. Also, you need to record in the debit side. Rupees 120. Telephone bill is also an expense. Income received in advance. Income received in advance. Rupees 40,000. But if you receive income in advance, it's a liability, so it has a credit balance. And then income receivable. Income receivable is having a debit balance of 20, right? Okay. I think all the ledger balances except the capital balance we have listed in this trial balance. Then how much would be the capital? Puta, when you are calculating the capital, what you're supposed to do is take the total of the debit side. Puta, capital balance has not been given. So take the total of the debit side. You can use the calculators in taking the total, which is 13,172,000. So you can take the 13,172,000 into the other side and then subtract the credit total. The credit total you can take, how can I take the credit total here? 4,230. Credit total is 4,230. Then what are we supposed to do? From the 13,172 of debit total, you subtract the 4,330, which is a credit total. And on balance of the capital account, Puta, rupees 8,900,000. How did I calculate the capital balance? Not subtracting the liabilities from the assets, from the debit balances. From the debit balances, you have subtracted the credit balances. From the debit balances, you have subtracted the credit balances. Is that clear? Right. And how much could be the capital account balance? That is rupees 8,942. Right. So this is the trial balance that you prepare for this business. They have not given the name of the business in this, right? But they want you to prepare the trial balance as at 31st March 2020. So then trial balance we have listed in this way, right? Okay, Buddha, we can stop with this. See with another video to talks about some additional or a practice question from the same theoretical area what we discussed in the class, right? Thank you.